Welcome to the Loan Officer Wealth Podcast. I'm your host, Chris Johnstone. And out of the top 100 loan officers in the nation, we have had over 25 on the show. And there are only 3 strategies that they are using in order to continue to grow their businesses. Would you like to know what they are? Well, the first is database marketing. The second is referral partner marketing, and the third is consumer direct advertising. And at Connection Incorporated, we now have artificial intelligence powered systems to generate you results in all 3 of those areas. We have the database activator for your database that reaches out, generates referrals and repeat business from your past customers, but also fills your Google business profile with raving 5-star reviews from your past customers. Our referral partner strategy books you at least 2 networking appointments a week with top performing referral partners. That's realtors, financial planners, investment advisors, insurance providers, solar companies, you name it. If they have high volumes of customers to send you in today's marketplace, this strategy works exceptionally well to fill your calendar and provides massive value. The people that are leveraging this strategy right now have almost a 100% show up rate with those referral partners, and you have something of massive value to give them. So it's very easy to get that high value partner to start sending you business. The third way that we're using artificial intelligence to grow your business is by getting you ranked on Google's new AI powered front page. We get you ranked in the 3-pack. We get the ratings and reviews from your past customers, and you get inbound phone calls that you don't have to chase or cold call that are pre-sold on working with you because they have already read your 5-star ratings and reviews on Google. These are the 3 pathways to grow your mortgage business, and we can help you implement them and artificial intelligence in your business. So right now, before you enjoy today's episode, go to aiseo.connectionincorporated.com. That's aiseo.connectionincorporated.com. If you're driving or enjoying this while doing something else, the link is in the show notes. Make sure you take the time to head on over, book a one-on-one strategy call with us so we can tell whether or not this strategy will fit for you in your marketplace and if you qualify to be one of the 2 professionals that we work with in each market. I hope you enjoy today's episode in the Loan Officer Wealth Podcast. Hello, everybody, and welcome back to a very special episode of the Loan Officer Wealth Podcast. I am joined here with Elsy Hedman, the number 9 loan officer in the country. Elsy, thank you so much for being on the show.
I don't follow those things, but okay, great.
And the top producers never do. They're like, oh, really? I am? Oh, that's great. I haven't had time to check between text messages and emails and all of the other things that are required. Exactly. Awesome. So head of AMH Capital and have been for a number of years. So again, yes. Congratulations on that. So first off, just so our listeners can get to know you a little bit better, can you give us your background? How'd you get in the industry and how did you get to the position that you're in now?
Okay, so I fell into this job, probably like most people, by accident. Graduated UCLA 1997 and in finance, got a job at one of the top accounting firms, started there. Was not for me. After 2 months, I'm like, this is not what I want to do. And I quit. I just quit my job, and which was probably really dumb looking back. But when you're 22 years old, you're like, didn't know any better. Had no backup plan. And my dad used to sell and buy real estate. His agent called one day and said, what are you doing? Your dad said he had a fancy job. I'm like, yeah, I don't know yet. And she goes, talk to my son. And I go, what does he do? He goes, he owns a mortgage company. I'm like, what's that? He goes, just go talk to him. They make a lot of money there. I'm like, okay. So I went and he hired me. And he said, you just need to get your license. So I got my license within 2 months. I said, okay, I got my license. He's like, what? That was fast. I go, well, you told me to get my license. So he started training me. I would answer phones and I just learned the business from the bottom up.
Wow.
I would then he started giving me files to process. And then he started basically mentoring me as a loan officer. We'd stay evenings. I'd listen to him talk to people. We do something called payment planners where we run their credit, show them what they're paying now and what we would do if we refinance them to pay all those debts off and what they would save. And that just started me easing into the business. And then to my betterment. And unfortunately, somebody else in the business in my office, he had a breakdown, shall I say, and couldn't do it anymore. So they handed me all his accounts. And I was just like, what do I do? So I just figured it out, sink or swim. And to this day, I still deal with many of those accounts.
Wow.
Yeah. So I've grown up in the business with them, and it wasn't until 2005 when I had my first son that I said, I can't work at this place anymore. I need to go on my own. And that's what forced me to, my husband got his broker's license, and I just went on my own, and here I am.
That is incredible. What an amazing story. So
Yeah.
many people in the mortgage business just kind of fall into it,
Yeah. Yes.
but everybody has a trial by fire moment where it's
Yeah.
like, am I going to stay or am I going to go?
Right.
And
Right.
the top producers are always the ones that are like, I just figured it out. I just did the
Yeah.
work.
You just sink or swim, and you go with the tide. You don't fight it.
That's it.
Yeah.
So, fast forward to today. It's a very interesting market. Volumes are starting to tick back up.
Yes.
Where do you get the majority of your business from? And then we'll kind of dive into, how you bring that business in.
So, as I mentioned, when I took over these accounts were home improvement contractors. So they would go out to a home, and let's say Mrs. Jones wanted to do a room addition. Well, she didn't have the funds. They would call me from the home. How can we finance her? Take her quick app, run her credit. Okay, Mrs. Jones, good news. You qualify. I can wrap this up, get you a refinance, pay for the home improvement. Boom. So I started getting all these contractors that would do that for me. And to this day, I have big accounts like Semper Solaris, which is a big solar company.
Yep.
My good friend owns it. So I'll get all their secured financing, shall I say, not their unsecured, secured financing, and other home improvement companies throughout, where again, they call me. I got 5 phone calls on Sunday. They're at clients' homes. I pick up the phone, take a quick app, talk to them. Yep, I'll run your credit Monday, and here we are. So that is the majority of my business.
That is incredible. So with the solar contractors, do you have a funnel that you use to go out and generate those relationships? How have you built that, Rolodex over the years?
I don't mean this to brag or anything. I've just never advertised, and I've never gone out there. It's been word of mouth. I think if you're accessible to these people, because most of their client meetings are in the evening or on the weekends, I pick up the phone.
Yeah.
And that's what they like. So if Mike works at this company, but then Mike leaves to go to this other company, he goes, hey, can you finance over here? I talked to my boss. He wants you to come in and set up a presentation. I'll go meet them. Hey, this is what I do. They start calling me. I get that company, and it just multiplies. So that's been how I've basically maintained my business and grown it.
That is amazing. It's standard practice in the mortgage industry to be realtors, financial planners, investment advisors, that sort of thing. Do you focus on that part of the business at all?
I do have realtors that give me business. But it's not my main source of business. It never has been. So, but right now, as I say that, I have probably 10 purchases going. It's just the refis and the equity lines right now for the home improvement contractors. That is my bread and butter.
That is amazing. So for those of you listening to this, it'll be a little bit past this date when we release this episode, but it is August 1st, 2023. So for all y'all that are saying that refinances are dead and there's no money out there,
no,
you just heard it from the source. There is still a ton of business out there to be done. Right. So Elsy, I'm assuming you help somebody, they get the refinance, you help them out, they get the solar on the roof, they're super happy, they're happy with the solar company, they're happy with you. Does that generate referrals for you? And do you have a process to generate referrals from the people that you're doing business with?
Absolutely. It's not so much me mailing them out or anything. It's I develop a very personal relationship with clients. I get to know them, get to know their family, what's important to them. And I always prep them, basically, especially in this time. The rate's a little high, but let's get the cash out now. And when the rates drop, which I believe early next year they should be, you're going to get a phone call from me. If you get something before, if you get solicitation or mail, call me. Let's make sure that's accurate because I know I'll beat the pricing. Oh, we wouldn't go anywhere else. So you prep them, and on top of that, I do have a system in my computers that remind me, call Mrs. Jones, rate is this, refi. So then they get a call from me.
Got it.
So
That is amazing.
it's just an ongoing system. And you really do prep the people to say, look, we're doing this, but this is not your end game. We're going to get there with the next refi. And it's going to be a rate and term. Rate should drop. The rate will be lower because it's a rate and term. The FICO should be better because we're paying off debt. The house will be worth more because we're adding on. Boom, boom, boom. We should be in a better position.
So simple, yet so brilliant.
Mm-hmm.
I think so many people here in the mortgage industry are so transactionally based that they do that one deal and then it's on to the next, and it's on to, buying leads from Facebook and just trying to build the business the hardest way possible when the clients you've already done business with are the easiest source of business.
Gold. They're gold.
Yeah.
And they're good people.
Sorry. So I interviewed the number one loan officer on the Scotsman's Guide a month ago, and his number one source of business was his database. And he had a system in his CRM where he would put in what rate they locked them at or what rate they closed at. And then he had an automatic reminder system that would notify him when the rate dropped. And it would also notify the client automatically to say, hey, it's time for us to have our call. Do you have a similar system?
Pretty much. Mine is more, shall I say, rudimentary. I just remember. I'm a mom, so I multitask. I remember everything. I do build these very good relationships with people where I've been invited to baby showers, weddings. So they just know me, and they'll get a call from me. And sometimes it's just a chat. How's the family? How are you? What's right? Oh, you guys are good right now. Let's just keep an eye on it. We'll talk maybe in a couple of months. When people feel that you have their best interest at heart and not just a sell, they will remain loyal to you and they will refer you people. When they feel the pressure of you selling, they run.
Yep.
So that's the only thing I would tell people. Really treat them like you'd want to be treated by your financial advisor, by your loan officer, and you'll get that back.
Yep. I could not agree more. And I think that's a long-term success play. It's so difficult, especially as people feel the transition of today's marketplace. They want to go out and sell, but it's not natural, but you've got to do the opposite.
Yeah.
Take care of people.
Yeah.
So the majority of your business comes from referrals, past customer database, no marketing and advertising.
Nothing.
I'm very interested in the solar side of things because very few people have tapped into that solar niche and that solar industry. So what are you seeing in today's market conditions with the rates and just solar? Solar, I still believe, is a new and it's got a huge growth curve to it still in the future. So what do you see for the future of solar and the mortgage industry along with it?
Solar, I can't really talk to, because there's been a lot of changes just in this year for solar. Some of them not so great for my contractors. But people still have a need and a desire to have that in their home, and I understand that. So yes, rates have gone up for us, but so have rates for their unsecured products. So their products used to be 8.99. Now it might be 11 or 13.99. And if you're financing a big solar project of 70,000, that can impact your payment. So if we wrap that into a refinance or an equity line, it makes their payment lower. And if we do the equity line, let's pay off some debt. Let's get your payment lower, and then make sure there's no creep. Of course, it's an owner occupied. And then also prep them. In 6 months, we will combine your first and your second. As long as it makes sense, the numbers won't lie. It'll tell us if it makes sense to do.
Yeah.
So they usually go with that. But I do solar, I do pool contractors, I do home improvement remodeling contractors. It's just a wide gamut of different type of contractors that we work with.
That is absolutely incredible. And I think from a value position, you've provided so much on this episode, Elsy. Thank you so much. How can other loan officers that are potentially interested in learning more or potentially joining the team, how do people find out more about you and more about the business?
Well, about me, I've had the same number since I started this business. Just AMH Capital. I'm in Pasadena. I live 6 blocks from my office. In the business, I would say, you know, it's a tough business when people say I want to be a loan officer. I go,
Yeah.
it's tough. It's not, it might look easy to you that I leave and come as I go, but I've been doing this for a long time. And my phone is constantly ringing and I'm always accessible. So if it's not for you, this is not your business. This is not a 9 to 5 job. And a lot of people coming into it want to make the money, but they don't want to put the time into it.
Yep.
And when I first started, I wasn't making the money I'm making now. Um, but you build it up. But I see somehow, I don't know, maybe the younger generation right now doesn't have the patience, shall I say. They want the quick buck and move on. And that's not this business. It's cultivating your clientele, taking care of them, building up your network, your network of contractors in my case, and just maintaining those relationships where even if I don't make anything on the loan, my contractor gets paid. That's all that matters. On to the next deal.
Yeah.
There are sacrifices, but you just got to get them done. So again, it's patience,
Yeah.
patience, and it will come.
That is
Like the
amazing.
rates will drop. It's patience.
That is a fantastic way to leave it. Patience is key in today's marketplace. But I
Yes.
can also say, so I'm a huge fan. I just reread the book Acres of Diamonds, and it's all about. Have you read the book?
No, no.
So I will shorten it, condense it, and probably butcher it. So my apologies to the author who is since long gone. But it's a story that's told by a priest, and this guy who decides that he wants to start a diamond mine. He like diamonds are discovered. He decides he's going to leave his farm, leave his ranch, go out, and so he goes, spends 20 years of his life trying to buy a diamond mine, mining for diamonds. It never works, breaks him, and he comes back home after selling the farm, moves in next door, and the guy he sold the farm to discovered that there was a river that ran through the property that was full of diamonds. And the moral of the story
Yeah.
is that most often we're all sitting on our own acres of diamonds, but we're all out trying to find them elsewhere rather than
Absolutely.
focusing on where the opportunity actually is. And in today's marketplace, it's your database, it's your realtors. Everybody is experiencing the same market. Now's the time to be in a relationship where you're supporting, you're teaching, you're
Yes.
learning, you're growing, all of those wonderful things, because in 6 months, 12 months, whenever it is, those relationships are what build your career and pay you in the future. And it's absolutely critical that you spend your time and your focus on that. So
Absolutely. Very well said.
awesome. Elsy,
Yes.
thank you so much for being on the show. I
Welcome.
sincerely appreciate you.
Of course. Have a good day.